We're going to review the freeandclear.com FHA Mortgage Qualification Calculator, which is a mortgage calculator that allows you to determine the size of FHA mortgage you qualify for, the upfront and ongoing FHA mortgage insurance premium a borrower is required to pay when they obtain an FHA mortgage, and the FHA loan limit in your county. To find the FHA Mortgage Qualification Calculator, simply click on the Mortgage Calculators tab on the top left of any page on freeandclear.com, and that'll take you to a page that lists all the calculators available on Free and Clear. The FHA Mortgage Qualification Calculator is listed at the bottom of the page under Government Mortgage Program Calculators. If you click on the triangle to the right of the calculator title, it reveals a brief description of the calculator. I'm going to click on the title, which will take us to the calculator page. I'm going to briefly review the calculator before I walk through it step by step. The Federal Housing Administration, also known as the FHA, offers the FHA mortgage program to help individuals with moderate incomes or limited funds purchase homes. The FHA mortgage program enables you to purchase a property by making a down payment of as little as 3.5% of the purchase price of the property, as opposed to a down payment of 10 or 20% typically required when you buy a home. The FHA mortgage program is open to all individuals, but is especially useful for first-time home buyers. There are limits to the size of mortgage you can obtain through the FHA program, and the borrower is also required to pay an upfront and ongoing FHA mortgage insurance premium in addition to their monthly mortgage payment. The loan limits vary by county and the number of units in the property you are buying, and the mortgage insurance premium depends on the mortgage size and term and the loan-to-value ratio, or the size of your down payment. I'm going to walk through the calculator now. It's important to highlight that if you ever have a question about an input, simply hover your cursor over the icon to the left of any input rectangle, and it reveals a brief description of the input and the information required. The first input is monthly gross income. We want to emphasize that this is gross income, so your income before any deductions such as taxes, Social Security, and Medicare. Please note that if you are applying for a mortgage with a spouse or partner, this input should also include your spouse's gross income. I'm going to input $7,500 for monthly gross income. The next input is total monthly debt. So any recurring debt that you pay on a monthly basis, such as a car loan, credit card bill, or student loan payment, I'm going to input $400. The next input is interest rate. If you hover your cursor over the icon to the left of the drop-down menu, it shows the current interest rate for a 30-year FHA mortgage. In this case, the current interest rate is approximately 4.125%. If you click on the drop-down menu, it reveals a wide range of interest rate options, and I'm going to select 4.125%. The next input is mortgage term, or the length of the mortgage in years. Mortgage term is one of the factors that determines the FHA mortgage insurance premium. If you click on the drop-down menu, it shows a range of options from 1 year to 50 years, and I'm going to select 30 years because that is the most common mortgage term. The next input is down payment, or how much of your property purchase price you are contributing. Down payment is another factor that determines the FHA mortgage insurance premium. The FHA loan program allows you to obtain a mortgage with a down payment as small as 3.5%, so I'm going to select 3.5% from the drop-down menu. The next two inputs ask the state where you are buying the property and the county where you are buying the property. These two inputs are used to calculate the loan limit in your county. If you click on the drop-down menu for state, it reveals all 50 states. I'm going to select California. The drop-down menu for county will now contain the counties for the state we selected, and I'm going to select San Diego. The final input asks the number of units you are buying. The drop-down menu reveals options ranging from 1 unit to 4 units. If you're buying a home or a condominium, you should select 1, and that's what I'm going to choose. We've submitted all of our inputs, and I'm going to click on the Calculate button, which will produce our outputs. The first output is the estimated mortgage amount we qualify for, which is based upon our gross income. The next output is the FHA mortgage limit in the county we've selected, and as you can see, our estimated mortgage amount is below the loan limit in our county. The next output is the estimated price of the property we can afford based upon our estimated loan amount and the down payment we selected. The loan-to-value ratio represents the ratio of the mortgage amount to the value of the property. In this case, because we're making a down payment of 3.5%, the loan-to-value ratio is 96.5%. The next output is our estimated monthly mortgage payment, which is calculated based upon the mortgage amount we qualify for and the interest rate and term that we've selected. The next output is the estimated total monthly housing expense, which includes our mortgage payment, property taxes, homeowners insurance, and the ongoing FHA mortgage insurance premium, which is paid on a monthly basis. Please note that this figure represents an estimate only, as property taxes and insurance vary by county, so check with your local service providers to understand the cost for these items in your area. The next output is our 45% rule check, which looks at total monthly housing expense plus your total monthly debt as a percentage of your monthly gross income. This is also known as a debt-to-income ratio. There are no set rules, but lender guidelines for an FHA loan typically allow you to have a maximum debt-to-income ratio ratio of 45%, which means you can spend a maximum of 45% of your monthly gross income on your combined monthly housing expense and other monthly debt such as credit cards, auto, and student loans. In this case, we're good to go because we're below the 45% rule. The next output is the upfront FHA mortgage insurance premium, which is a one-time upfront fee that the borrower is required to pay when they obtain an FHA mortgage, in addition to other loan closing costs. The upfront FHA mortgage insurance premium is fixed at 1.75% of the mortgage amount, regardless of loan size. The last output is the annual ongoing mortgage insurance premium, which the borrower pays on a monthly basis in addition to their mortgage payment. The ongoing FHA mortgage insurance premium is based on loan size and term and the loan-to-value ratio. This is the total premium that the borrower would pay over the course of a year. It's important to highlight that you could change the calculator inputs without having to refresh the page. So, for example, if I change the down payment from 3.5% to 20%, and click Calculate, our outputs update automatically without having to refresh the page. After you've reviewed the calculator scenarios that apply to you, you can click on the Compare Lenders button at the bottom of the outputs and review a table with interest rates and fees for lenders in your area. If you are interested in an FHA loan, select Include FHA Loans on the left side of the page, and the lender table will update automatically. If you have any questions about the FHA Mortgage Qualification Calculator or any other mortgage topic, you can always click on the Ask an Expert button at the top of any page, and it will take you to the free and clear Ask a Mortgage Expert feature where you can submit your question. The feature is free to use, and we never spam. We also encourage you to review other resources on Free and Clear that cover the FHA mortgage program, including our comprehensive review of the program and our mortgage program section. Thank you for reviewing the freeandclear.com FHA Mortgage Qualification Calculator.